Hey traders, John Howell here. So today, what I want to be covering with you today is I think the health sector, guys. The health sector might be starting to kick into play. It's been nothing for a few years, and I want to share with you that there as well. And also a health stock that I think may be bottoming as well. Nike actually looks like it may be potentially finding a bottom. It's really interesting. Nike's been getting hammered lately as well for a while. But it may be finding a bottom as the stock market might be finding a top as well too. And I'll be talking a lot about the actual, about the TMF and TLT. I'll also be talking about the energy sector. Some people have been really talking about the energy sector. And I want to tell you about what I'm seeing and how I'm seeing the energy sector when it comes to everything from there. Now, the one thing that I'm always trying to do myself, before I do start, check out this screenshot here. Every time we go through a cutting cycle, it's really weird, right? Because like we have this thing in our mind, because it's like, if rates go up, stock market should go down, right? But as you can see, look, this is the actual cutting cycle of the Fed. Every time we've gone through a cutting cycle, guess what will happen? We've actually gone through a market drop. So we're in a bit of a cutting cycle here. So you know what that means, right? So the thing that I really want you to be focusing on as well too is that smart investors, and I'm pretty sure you guys have been probably involved with the markets now for more than say 10 years, you would have seen this come and go, right? The cycle things. What the smart investor, what they're doing is for new positions they're looking to get involved with, they're seeing where is the market that is down here, this level down here. That's where they're at right now. And it's like the same thing for me, right? Like I see that this bit up here, I see this is where we are in metals and miners. And I also see this being, say, roughly where we are right now in the stock market as well too. So what you don't want to be doing is you don't want to be chasing something that has already made a really nice move, because you just never know when that's going to end in the in the marketplace there. So one thing that I really want to sort of drive home here, I want to start off with the with all the markets being so high, okay? With all these markets has been so high, there's definitely going to be some sort of correction out of these marketplaces, out of this level here. As you can see from this, here's I'll get to this one in just a minute. But looking at, just looking at all the markets, right? So this is obviously all the silver and gold and so on and so forth. Silver, gold, and the mining sector. And we just know, right? We just know. For me, for new opportunities to get involved with things, right? This is not existing positions. I'm already existing in the metals and miners. People don't even realize I'm actually long the metals and miners right now, guys. You do realize that. Now, I got out of an option trade because it was a trading option. But I'm actually long the market. I've been long for many years for an investment, long term. And I will be for a long time. But and that's where like a lot of people I'm not sure you understand that, but I've actually been long since 2020. I was buying 2021, 2022, 2023, so on and so forth. But where we are right now, this is gold. This is the silver here. This is the GDX, and this is the SIL. Very, very, very vertical. It's crazy vertical, more than we've ever seen here. Okay, and we go to the actual. This is now the stocky markets, and we can see the same dynamics. So while no one knows when the exact top's going to be, like I don't know when the exact top's going to be, but just by looking at these charts, you do know that we're definitely at the top of this thrill and euphoria phase and complacency. And so we're probably going to see a big drop to the downside. What this is telling me though is as in like all these markets doing what they're doing, is it's telling me that 2026 is probably going to be a very challenging year for a lot of people. Very challenging year. Why is that? Because there's a lot of traders out there that don't have a good trading system, trading approach. There's been a lot of geniuses in the marketplace today of riding this big bull market. And so that genius in the marketplace today when the music stops and we do go through a big correction, they're going to be hurt because they've been holding, hoping, praying, and all that sort of stuff. So that's what I'm seeing there across the actual board. If you like to learn my system, there's that link in the description there. And same with my coaching. You want to get access to my coaching program? Link in the description there as well. Now, that's what I'm seeing there across the board, guys. And again, for me, for new positions in the markets, opportunities, it's not up here. You want opportunities down here, right? You want opportunities down this guy through here. So as we can go to this belief and up through here. This here is where I believe the bond market is. The bond market, right? TLT, TMF. So if I bring this up to here, if I bring up just a line chart and I bring on TMF, for example, this is the one that I've been talking about here. TMF, TLT, right? Same. I honestly believe now, after all this time that the bond market is being getting crushed, I believe one of the greatest opportunities right now for the next 12 months, guys, okay? Not 1 week and definitely not a shorter term move. This is going into probably for majority of next year as well too, okay? Is where I believe one of the markets, this sort of disbelief here, I'm actually starting to see that with the bond market. So for me personally anyway, I am honing down now on, or actually I'm not honing down, I'm actually in it, on this level here. Because I do see as interest rates and everything starts to switch, and we're actually already starting to get it, we're probably likely to start to see a move back up towards there, especially in the next year. Because next year, guess what? Next year is going to be the year of the crash. Next year is going to be the year. 2026 is going to be a really bad year for a lot of people. 2026 is going to be, it looks like it's just written on the wall, right? With everything being so vertical and all and the reason why I say that, guys, is that if you go look back through history, right? If you go back, look back through history, you'll see everything that's gone vertical pretty quickly comes down really quickly. Just look at this here. Look how fast the TMF went up. Within 12 months, what actually happened? Right? So every single market that gets a pretty strong vertical spike, that's giving you a warning sign that something bad is coming, right? Meaning there's going to be a really big drop in the markets. It's screaming at you right now. My only hope is that I can protect you from knowing that, or if you are a long-term investor, just understand that, and therefore you don't get freaked out about it. So the TMF and the TLT, this is the one, the market I see this is the best opportunities out there. Silver, gold, mining stocks, stock market. There's just so much movement, and it's definitely not the place to go. To me, the best opportunities right now is definitely the bond market from there. Now, I did talk to you about. There's definitely one sector here that I want to. I'll bring this up while I'm on TMF. Let me bring this up to here. I'll show you this here. All right, let me bring this up to here. There we go. There. Okay. So if I bring this up to here, as you can see, what we're seeing here right now is we're seeing this big down move, and we're seeing this sort of false breakdown and holding through here. If TMF can break above that level there, we're probably likely to see a big move up. And depending on how bad things get, we're probably likely to see that as well too. Now, if I bring that up, but then I bring up the actual interest rates, this is what's happening with the interest rates here. Right? What's happening through here? Look at that. What is this here? We're starting to break down in the interest rates. That's the 10-year. It's already starting to happen, right? What is this here? Big, long-term, big, massive head and shoulder formation. There's your shoulder, there's your head, and there's your big shoulder. You know what that means, right? All this massive head and shoulder formation, big rounding top, breakdown, guess what it means? It means more downside to come, right? And so we can see that through there on that one there. And we also can see on the 30-year as well too. The 30-year, same sort of thing. And we take that off the screen. We can see the same thing here. No head and shoulder formation, but we have been sort of holding on through here, squeezing up, and now we're actually breaking down. So this could be getting ready for quite a serious move, guys. Quite a serious move around these markets from here. Now, one of the sectors here that's actually starting to catch a bid is the health sector, which is, let me bring this up to here for you, XLV. Right, look at XLV. XLV is starting to, I was actually doing some analysis here, as you can see. But XLV is the sector that looks like it's starting, or no, it is. It's actually catching a bid. We actually weren't doing much for majority of this year. So as the stock market's doing nothing, as the stock market's been going up, this health sector's not been doing much, and now we're actually starting to get a bit of a breakout here. So the health sector could be the sector that actually could be getting ready for a nice rise to the upside. In fact, there is one stock that I saw within the health sector, and that is Pfizer. Right? Pfizer looks like it could be, if I bring up this chart here, right? Look at this here. And I bring up the weekly chart. See all this here? So we actually came down. This here could be this could be the last flush down, as you can see, before we see up. So we may be getting ready for quite a nice move back to the upside when it comes down to the Pfizer. And the overall health sector looks like it's starting to catch a bit of a bid there. So looks quite nice from that perspective there. Now, what I want to do is I want to also touch on the energy sector. One of the things that I think I've talked about the energy sector in the past. By the way, guys, one really big mistake I'm still seeing people do is they're saying energy sector and the oil market together. Let me make one thing really clear here, okay? One thing really, really clear. And this is just, it's common sense, okay? People are trading the energy sector, but they're like, I'm trading the energy sector, but oil may go down, or oil may, like, all that sort of stuff. What are you doing there? What are you doing? This here has nothing to do with oil. Yes, it does, John. No, it doesn't. Meaning, let's just go look at the actual market here. I'm not sure why you guys are doing that to yourself. Because if I bring up the weekly chart of oil for you, this here is the weekly chart of oil. Let me bring this up to here. These charts look nothing like each other. Here's 2022. Here's 2022. You see, they actually look nothing like each other. So you are actually if you are trading like that of correlation trades, like you're correlating, these charts look nothing like each other. So that tells you they're not connected anymore. It's actually telling you this has been going down a lot since 2022. This has now been going up and sideways. See how they actually look nothing like each other. So it's so important to stop comparing, stop saying, it's so important to say the energy sector is the energy sector. Biggest mistake I'm seeing right now is that, and as you can see, it's not me. Look at the facts. They're not connected anymore. If they were connected, they'd have some sort of resemblance. You know what I mean? Like, you know, we'd have something like this going on in the energy sector. But energy sector is about to break up to all-time new high. So just look at the facts for what you're doing there, guys. Okay, I see some people saying, "Well, John, I'm in the energy sector, but I think oil's going to go down." What's oil got to do with the energy sector? They're different markets, completely different patterns, right? And especially look at the last few months. Last few months, oil down. Last few months, energy up. Oh, but that's and then you're gonna don't do that to yourself, guys. Please don't do that to yourself. If you're going to trade the energy sector, trade the energy sector. Right? Who cares about oil? Oil can keep going down and the energy can keep going up, because that's what it's been doing for a long time. But when it comes to the energy sector, one thing you need to understand about some things that I've mentioned in the past when it comes down to the energy sector is I've said on the monthly chart, it looks like it's setting up. No, it is setting up. It is setting up. But one thing that you got to understand is that you need to wait for the breakout first to tell you that where it's likely to go. See, this is the setup here. I have a nice good, what's called the L-shaped trading pattern, up and then sideways. So I have that through there, okay? I'm seeing a lot of people, they probably heard me talk about this about a month ago, I think it was now, a few weeks ago. And they're like, John, the energy sector, I'm not in the energy sector myself. Why? Because I need a breakout first. I need this thing to break above 100 first for me to start to look at this. So if you guys are entering the energy sector based off a video that I did, you do know this is a monthly chart. Monthly chart. That's right. 20 trading days for every single one of these candles here. Anything can happen here. And for me, I'm not in the energy sector right now because it's a gamble. It may go up, it may not go up. So the thing for me for trading is that I'm now looking for an opportunity. I'm now waiting to see if one. But here's the thing: once it does break above 100, and the same for XOM, then I see like things like XOM. I do see this thing getting up to about 190 up from there. But for right now, guys, I'm definitely not in this here. The thing for me is I have trading setups, right? I don't just trade because I think something's going to break out. I'm getting the setup that it's going to be a good trade, but I need to wait for this thing to start to at least break above this level here. They tell me now we're likely to be starting this next move, and I haven't gotten that yet. So I'm gonna watch this. And so I hope you guys can understand that. Some of you guys are trading this XLE market and XOM based off, I'm not sure what, maybe in my YouTube video, but you can see I'm not in this right now because this could easily go down as well too. So that's what I wanted to cover with you on there. And one of the last markets that I wanted to cover with you today is Nike. Check out this. Nike could be putting in a bit of a V bottom here. All right? Look at this here. Down, up, down. If we can hold here and start to break up above this 80 level, then that's going to be like one big sort of bottoming pattern through here, through there. One big bottoming pattern. And then now we could actually potentially be starting to see this thing move to the upside. So, in a nutshell, guys, here's, as you can see, even within the stock market, okay? With the indices are the indices and not the entire market. The Nike's been going down as all the markets been going, the indices have been going up. That means if the indices come down, which I do see them coming down soon, Nike can go up. There's many markets out there that looks like they're about to start to see a very big bull market. That's in the stock market. Nike, I've been watching Walmart as well too. Things like Disney. So I've been keeping an eye on Disney. There's a lot of markets out there that look like they're about to break up and starting to move. And this is what I say about correlating trade. Remember I said before about people make a mistake of trading energy, XLE, and then starting to like, but oil, like just focus on the energy market. Focus on the energy sector. Right? Same for the stock market. Just because the indices, the indexes are making really big moves, doesn't mean all stocks are making big moves. That means when the stock market does start to see a correction on the downside, there's probably going to be some really good, there's still going to be many stocks. Even if the S&P drops 10%, I guarantee you there's going to be many stocks that make 20, 30% move on the upside at the same time. So the purpose of that, guys, is that you don't want to be saying, well, the stock market's going down. Well, it's not really the stock market, it's just the S&P, right? Now, in that case. And what you want to be doing is you want to be analyzing each stock at its own merits, because as I said before, just because because all the indices are going up right now, many stocks are getting crushed right now. And same for Nike. And then just because the market could be going down soon, like getting like crushed soon, which it will be soon, doesn't mean things like Nike can't find a bottom and start to make us move all the way up from here. So I'm not saying this is the bottom right now. I'm not in Nike. I'm just sort of referencing into it that this actually could be now finding a bottom, and there's actually many opportunities out there right now, guys. And the worst opportunity is trying to jump in on gold, silver, and the mining sector because you think it's going to the moon. If you're looking for new opportunities, which I am, then you don't look for opportunities down here. For me, one of the best opportunities I believe right now for the next 12 months at least is the bond market, TMF, TOT, as the interest rates are coming down, right? So once again, as these interest rates are coming down, breaking down from here, you can see a big breakdown from here. I see this thing continue to roll over to the downside, and within that, we're going to start to see the bond market start to finally rise out of all this time. And if I bring up a line chart here and I bring on TMF as a line chart, this is a line chart down the bottom here. I see this thing flattening out. And to me, it's one of the best buys I've seen in a long time right now, apart from the mining sector a few months ago. But right now, as I speak, then we could actually start to see something like that. Now, TMF is a volatile market. So whoever's in TMF, it's a volatile market. It can go up and down, up and down. And this may take 12 months or more for it to filter through the system. So I'm not expecting too much of a movement this year, but especially next year as we start to see a really big correction out of the stock market, gold, silver, mining stocks, the indices, everything is going to have a really big hit. When that happens, then I'll be saying I'm so glad and I'm so happy that I got into TMF and TLT at the time, because now I'm benefiting from it.